Hello and welcome back to another session of the Market Outlook series. I'm Kavita Agrawal, the founder of EXP-Invest. And like every Friday, we are here to talk about Nifty, Bank Nifty, and the sector analysis. So let's go forward with the 3-minute time frame of Nifty and understand how the price activity has unfolded so far. What are we noticing all the way from the intraday levels to the larger time frames, and determine where our money should be for the coming weeks. Now, this is the 3-minute time frame of Nifty. Now, few days back, I was noticing that there was this support, and I had an alert set here, which suggested that if this support of 21,500 or 490 got breached, then I was expecting the market to go down to 21,200 levels. But thankfully, that support hasn't been breached yet. However, if you see throughout the week since Monday, that is. So on Monday, we forged a new lifetime high, but that was very, very short-lived. The last weekend, if you remember, we discussed that Nifty had moved into the bearish range on the RSI 3-minute. So see, when a very strong bull trend is unfolding, the 3-minute time frame doesn't really have a lot of strength to do anything of substantial impact. The maximum it can affect is 2-3 days, maybe a week at most. So this negative range shift that we noticed here with this negative divergence, you can see that RSI was shy of going above the level of 60 except for one instance when the high was forged, which is, by the way, a positive sign. A little bit of correction did unfold for the next couple of days. So some sideways consolidation and some downward correction. This correction extended all the way to the most recent support at the level of 21,500. All right, now let's move on to the 15-minute time frame and see what else we can notice. But before that, there is another observation that a positive divergence was formed when Nifty was hovering close to the 21,500 level, and sure enough, a upside trend ensued after that. In fact, this positive divergence was mentioned on my Telegram channel. Let me show it to you. So this is my Telegram channel, and on this, every day at the market close, I add my comments. So if you look here, chemical sector, okay, no, not this one here. So we did mention that a RSI positive divergence just yesterday has forged, and support was coming in at the level of 40. So now let's go at the 15-minute time frame. So what I have mentioned there as the level 40 support is basically this support that we are witnessing here. Level of 40. This is the level of 40, and we can see that even though the price took some correction, the RSI did not breach below the level of 40, and that is positive for us. Now I can see that the uptrend has again started. I'm going to delete this arrow. It's adding a little messiness to the charts. Right. So we have taken support at the level of 40 and going up. However, there is this negative divergence. But is it important? Is it important? So far, we don't have any clarity on whether it is important. One thing that we do notice is that this big decline that we saw on the 20th of December, right? So this big decline has already kind of dissipated, I would say, this negative divergence that was before it. So now what is starting here, this was also forged a lower low. So I wouldn't say that the momentum is as strong as it was earlier. At the same time, I wouldn't say that it looks like we're going to enter into a bear market outright. What is the best strategy for this kind of market? See, this is not a capital allocation market. This is a trail your stop loss kind of market. This is not when you seek fresh new positions. I mean, of course, if you come across some good opportunity, but the expectation is that when the market reaches this kind of stage, ideally you should be 100% invested. So 100% is obviously a dreamy figure. I personally am invested. I have invested nearly 97.5% of all the capital that is under my management. So this is the 15-minute time frame. Moving on to the 75-minute time frame. Volume activity is giving some interesting signals, because as you can clearly see, the volume participation, which was quite high in the first week of December, right? Even in the second week of December, that volume activity hasn't still returned in the market. End of December, when I was noticing this negative divergence and this decline in volume on a rising trend, that time my justification was that maybe it's the holiday week, that's why the market is not showing so much volumes. But the holiday week is now over and we are still seeing some upside, and the volume is sure it is picking up. I would like to see the volume increase a little faster. See, right now, I have been sticking with the target of 22,000 since the market broke above the level of 19,800, right? So since this level here, I have been telling you that 22,000 is very, very probable. Now market is up 10% and 22,000 is just inches away from us. At this point, I really believe, because of this trend line also which is present here, that this 22,000 is going to act as an important resistance. Is that something that we should be worried about? To answer that question, let's go one time frame higher to the daily time frame. So the daily time frame volume activity is suggesting that the underlying trend, that is this trend, is super duper bullish. So even if 22,000 does pose as a resistance and we see a correction, that is what it's just going to be. It's going to be a correction. We are not expecting the starting of a bear market or end of this bull market at all. The price and volume and the momentum activity on the larger time frames like daily and weekly are actually what dictate the price activity for the next few weeks or few months. And here what I can see is that the volume has been very, very strong against this rise. Now only this last leg where we are seeing a little bit of weak volume against rising prices, this is very easy to mitigate if this market can just take some correction. And for that correction, I think this would be a very good support level. So I would say my support for when the 22,000 target gets achieved, my support would be 20,000, 21,000, right? So a 1,000 point decline is not very bad, especially in a market where we've already seen almost a 3,000 points up. It's a pretty fair correction, I would say. Let's move on to Bank Nifty with this and see what we've got there. So going back down to the 3-minute time frame. So my target on Bank Nifty, like I said earlier, is 50,000. And on the Bank Nifty, the 15-minute charts is not looking, it's looking a little weak, or I have to say, because see, the RSI is not going above the level of 60, and when it is coming into even minor corrections, the momentum with which it is correcting is breaching the level of 30 repeatedly, which is not great. So the Bank Nifty, I feel, is going to top out before Nifty does. So on Bank Nifty, if we can even reach the level of 49,400, I think that will be an achievement right now. I am personally not a big player on banks, especially if you see this last bit of upside that is unfolded in Bank Nifty, right? The volume activity has been declining throughout that. So this is a very clear, very telltale sign of momentum exhaustion. So again, in Bank Nifty also, when the correction comes, I would expect the level of 46,300 to act as a significant support. 46,300. 46,300, I expect this level to act as a significant support. So somewhere near the level of the 100 EMA, 50 EMA, we can expect to get tested back with the market activity. Now let's move on to the favorite part, which is intersector analysis. We'll do it on the 75-minute time frame. Let's just take a quick look at Nifty again. And what we can see is that a recent bottom was forged on 21st of May. So 21st of December. So if we look at the activity starting from 21st of December, you can see here, right? I've adjusted the starting price as the opening from 21st December or the closing from 20th December's closing. So the realty sectors absolutely, blown every other sector out of the water, up 15% in the last, you can say 2 weeks. The PSE sector closed behind with an upside of 9%. The pharma sector is up almost 8%, so is the healthcare, so 7 to 8%, very good moves. Now, if you've been watching the Market Outlook series with me over the last few weekends, you must have known that I'm very bullish on the pharma sector. In fact, we had a long call in Ajanta Pharma also for the clients of the Trade Together program. Now, if you're wondering what the Trade Together program is, I'll tell you in a couple of minutes. Next is the CNX metal sector, which is again done. So overall, the entire market is done pretty well. Everything is up, but you need to compare it with the benchmark. So the benchmark for this purpose is CNX 500, and all the sectors that have outperformed the market have done really well. And see, we've been talking about these sectors only. See, I've been telling you to avoid the Bank Nifty and the Nifty and the CNX IT. They are like for short-term swing trading, that is, they've underperformed in the last 2 weeks. Another sector that I was suggesting to avoid is the auto sector, because I'm not bearish. See, I'm not bearish on any sector right now. Okay, when the tides are high, it uplifts every boat. We know that. But these sectors like auto, Bank Nifty, and IT, I think it is very hard to find opportunities there. I mean, realty sector, of course, it's a buy on dip, but because the realty and infra has gone up so fast, you have to be very careful in picking up stocks, because if a correction starts, you don't want to be stuck at the top. So make sure that your risk management is on point. Then next is the pharma and healthcare. So here, I think strong rally is unfolding. It's unfolding very fast. In metal sector, we have some bets. Energy sector is looking very attractive. FMCG is very attractive. Consumption, consumer durables, super attractive. So right now in my Trade Together program, there are different tiers, Esteem, Elite, and Exclusive. Now, depending how much experience you have in the market and how much capital you have for swing trading, I help you maintain positions like 5, 10, or 15. Okay. Why am I telling you this? Because this management of positions is very important if you want to succeed in the market. And in order to optimize the use of your capital in stock market, it's very important to keep your money in sector where the momentum is headed, not in those sectors where the hold on, I had a call. Not in those sectors where we feel that the momentum is not in those sectors where I feel like the momentum is losing out. Because if you park your money in stocks or in sectors which are not going to move at least faster than the market, then what is the point of doing all that hard work? You might as well invest in a index fund. So that is the reason we do this monthly, or rather weekly, intersector analysis. So with that, I have concluded all that I had to discuss with you, the Nifty, Bank Nifty, and the intersector chart analysis. Now let's move on to your favorite part, which is the stock analysis. So you know the drill if you're old here. If you're new, right now look at your portfolio and give me the name of the stock with the cost price. I will tell you what your important levels should be. This is what I do in my portfolio cleanup service, where I help retail traders who have unoptimized or weak portfolios. So I create a report and I tell them. Now, see, if you want to do swing trading with me, right, while you mention your stock names and costs, if you want to do swing trading with me with my analysis, click the link shared by the ET moderator. I am listed on the GapUp platform, which is an initiative by ET Market and Riggy together to bring to retail traders like yourself, SEBI registered research analysts who offer services which are tailor-made for you. So I am also an expert listed there. So please do go there, check out the details shared and make an informed decision accordingly. All right, let's take a look at the comments. So we have Gautam ji. Hello, ma'am. Please suggest a stock for fresh entry. So, Gautam ji, you'll need to join my Trade Together program, because on this platform, I cannot give you fresh recommendations. I'm more than happy to take the time out to help you pick up stocks. Same for you, Mr. Bharat. Please join the Trade Together program for fresh recommendations in mid cap, large cap, small cap, all stocks. Saurabh is asking, is SJVN good? So every weekend there is someone who's asking about SJVN. So I'll tell you the same thing, Saurabh, that I've already told people. SJVN has significantly rallied already. You don't want to onboard a bus which has already missed the station. Now there is a concept of mean reversion, and from what I can see, SJVN has a tendency to retest this yellow line or the blue line, right? The blue line is the 20 EMA and the yellow line is the 50 EMA. So please take the time. Okay, let me share the chart so you can see what I'm talking about. So this blue line is the 20 EMA, this yellow line is the 50 EMA. So wait for the stock to come back down there to buy, okay? But right now, I would not recommend you to make a fresh position because, like I said, the market is very close to 22,000 and we can expect some correction when the market reaches that target. Welcome back, Mr. Jalan. I do trade the US markets and I use interactive brokers to do my US market trading. All right, we have an inquiry for Alok Industries. You have it since 24. All right, so Alok Industries is unfolding into a pretty strong uptrend. I do think it has a strong resistance at the level of 35, 36. So what you can do is continue to hold, but at the same time, maintain a stop loss at the level of 28. Mastech for Korean. Let's see, Mastech. Shiju Korean 2740. So that's almost the CMP. I think Mastech is very attractive for the long term. So I would suggest you keep holding. If you've bought it for the short term, I think it has already taken a little bit of correction. I don't expect more to go on. Please maintain a stop loss at the level of 2593, and I think this stock has a pretty good capability to continue this uptrend. And the first target would be 3300, the second would be 4400 on Mastech. Can we go long on BNF at? So Suman, I don't recommend any options or futures trades, so I will not be indulging you. Good afternoon to you too, Mr. Vishnu. All right, Graphite India. We can take a look at Graphite for you. Let's see. The quantity is 311. No, quantity is 500. Price is 311. So guys, I don't need to know your quantity. Just tell me the price, okay? 311. So 311 is the pretty good entry price that you've gotten there. And the uptrend is quite strong. Strong volumes, little bit of correction can be expected, but let's see what the 75-minute time frame is saying. So here your stop loss will have to be slightly big, because if you keep a small stop loss, there's a good chance you'll get stopped out in whiplash. So maintain a stop loss at the level of 496. And as for the upside, I am expecting resistance to come in. So this is a little bit of a tricky area. So around 580 to 600 is where I believe we can experience some resistance in this stock. Yeah. Let's see. Oof, the screen moves a lot. I'm sorry for taking. The big question most of us has probably is, should we exit the long positions or hold on as the market is not yet turned bearish? Very good question. I will take the time to answer this one by Mr. Ganesh. See, the market is in such good bull trend, right? One very important quote that I read, and I forget the name of the analyst who said it, but it was a very well-known analyst from US, and they said that stay with the trend until you have compelling evidence to abandon it. Right now, there is no compelling evidence. So what can you do? Think of it from a risk management perspective. So risk management does not dictate that to avoid potential losses, exit your good positions. It dictates have a fail safe. So if you have active positions, just set a stop loss level and trail this. One is the stop loss, where if the price comes down without thinking, without you requiring to make a decision, your position goes away. Second should be an alert, maybe 1.5%, 2% higher than your current market price. When that alert gets triggered, right, you go back, look at the stop loss and change it again. So this is a very effective system that you can follow. See, if your price is below the all-time high, then you don't have any problem. You can look at the charts, you can look at key price activity levels, trend lines, and you can determine what your next resistance is. But right now, many of the stocks are beyond all-time highs, due to which setting the stop loss is really tough. So what you can do is the 2% rule. Set an alert above 2% of the highest price that you're seeing, and every time that gets triggered, go back to the charts, see where the previous low is on the 15 or the 75-minute time frame, and keep your stop loss at that previous low. Basically, what you want to do is you want to give your position somewhere between 3 to 5% of breathing room. If you exit right now, there's a possibility that the stock may go up further 10-15% before turning out. You don't want to miss out on that 10-15%. So what are your views on EPL? What will be the near-term target? So EPL is one of our active recommendations in the Trade Together program. And today it had started to give a pretty good move, but it didn't sustain. So I think EPL has juice, and there is a good possibility that it will go all the way to 235. See, this is the uptrend which I am expecting will continue. I believe that the correction of this uptrend has already ended here, and this is where a new bull trend has started. So the first higher high of the next leg of bull trend is already forged, and the stock is again gone into correction, right? So as long as this level of 190 is not breached, I'm not worried. My near-term target in the stock is the level of 234, but I also think the stock can scale the level of 290 also. So I'm quite bullish on EPL, but you need to be smart in executing your positions. You have to be careful. You have to look out for market whiplash, what people like to call stop loss hunting, but it's not stop loss hunting. It's just normal market activity. It's like the water, you know, when you take a boat out in the ocean, it's not that the ocean is trying to drown you through waves. Waves is just something that, you know, happens. And if sometimes it gets windy and wavy and your boat capsizes, you just gotta have to deal with it. You can't blame the waves of the water or the wind for being too harsh on you when you're out in the ocean. You have to know the ocean is risky and manage it. NRB bearing, bought at 372. Mukta, NRB bearings. Ooh, very strong trend. You should definitely hold. Strong trend with strong volumes. Let's quickly draw the trend lines, because as you can see, it's the first time I'm studying this. So very, very, very strong, beautiful trend is unfolding. However, already stock is at a very strong resistance. So I wouldn't suggest anyone to make any fresh entries. I can't believe I haven't seen the stock earlier. It just has this really, really textbook trend lines that's getting drawn. So I think there is some more upside left. We can expect 480 to come, right? But this last leg of the rally may not be as strong. However, the volume is very promising. So if you see, whenever the stock topped out, then also the volume was quite promising. So fine, there's no issue with that. I will suggest you, however, to please use a stop loss, and your stop loss should be somewhere here, right? This low that you're seeing, so 342. So yahan se your stop loss will be around 10% and your upside is further 22%. So this is why it's good to hold, but not for fresh entry. For fresh entry, we want a minimum risk reward ratio of 3. All right, let's see. REC, we'll look at the stock of REC, one stock per person. So Mr. Shivananda, we'll take a look at REC for you. What I can see in the chart of REC is that I feel like I'm looking at the wrong stock. Yeah, I'm like, I know this chart. This is not what it looks like. Ooh, very strong. All right. Fantastic. So, see, last time also when the stock took support and rallied, this is the same kind of movement it gave, right? So, we can expect the target to be at 550 for REC Limited, but I can notice that the volume has significantly declined. So, fresh entry is absolutely not suggested here. Stock is giving signs, early signs of momentum loss. If you have an active position, then you should maintain your stop loss. You don't want to maintain a 10% stop loss. Just maintain a reasonable stop loss of around 4 to 5% here. So 415, 414 would be your stop loss for REC. Bank of Maharashtra. I think it's called Mahabank, right? Yeah. Okay. So clearly there's been a turnaround. So let's just draw a trend line using this point, since it looks like the previous reality of the bank has changed. Okay, this seems very legit. And now it does look like the stock is experiencing some sluggishness. See, this channel, right? This channel is proving to be a little notorious. If the stock sustains above the level of 50 rupees, then it's good for a fresh purchase. If the stock, however, breaks below the level of here around 40 rupees, then that's going to be a little bit of trouble. Now, I know that that range is a pretty big range, but it's what the analysis is suggesting. And if you will see, the price has declined here, but the volume is super strong. And again, even this part, like the volume is been going up, but it's a very confusing chart right now. I don't see clear signals. The 15-minute is not particularly strong. 75-minute is also very mixed signals. So sorry, Bank of Maharashtra is not giving me any clear signals right now. Let's see, Shriram Finance. Will it reach 2200 on Monday? I don't know. I mean, I can't do predictions like that. I'm not a fortune teller. But the overall trend, it seems like some exhaustion is setting in. The volume is also diminishing. In fact, the volume is increasing. So what I'm seeing, I would call this signs of distribution and not accumulation. And I am not very bullish on Shriram Finance. I would not recommend a fresh position here right now. FTC Limited. Again. And the stock does have a tendency to retest, give a fake breakout. Wow, it really has this tendency of, oh my God. See, stocks always have tendencies, okay? So this stock has a tendency of giving a fake breakout and getting into correction. So you want to be very careful. I would not touch FDC right now with even from a large distance. Rajesh Exports, I do not suggest. Rajesh Exports, I do not suggest. Rajesh Export is not a great stock for retail traders to play in. Super shady, stay away. Ma'am, in trade with your program, you handle our accounts. So, Prince, no, the Trade Together program that I was telling you about, it's like a partnership where, think of it like this. You have some capital and you want to get into your side business. The side business is swing trading, okay? So you don't know how to analyze, so you come with me and we are kind of, So you're agreeing that you will do the execution on the basis of my analysis. So you trust my analysis, and I will tell you which stock to buy, when to buy, at what price to buy, when to trail the stop loss, when to exit. If exited, do you need to re-enter the stock depending on the market? So all analysis, but I'm going to take care of, which is basically 95% of the job, right? You just have to do the execution. So even if you have 15 minutes during the day, you just, whenever you see a Telegram update from me, because I run my programs on Telegram, whenever you see an update, quickly open the app, see what is the change, go to your account, change the GTT orders, because we only work with good till trigger or standing orders, as you may know it. And I have basically simplified the entire ambit of swing trading in such a way that you have to give only 15 to 20 minutes of dedicated time on average during the day, okay? And that too not at once, that too spread throughout the day. So that's what I do. If you're interested, click on the link shared by the ET moderator, go to the Gapper page and subscribe. It's very nominal, starting at 1 month. So you can do like a 1 month subscription to see whether, you know, it's setting, the workflow suits you or not. Can APL move further? Let's see. What is APL looking like? APL, I think you mean APL Apollo. So I am quite bullish on APL Apollo. This, like we were talking about mean reversion a while back. So this stock has a tendency of testing the 200 EMA on the daily time frame and giving a strong bounce up. And I have been purchasing this stock at the 200 EMA since the last 2-3 times, and I have been able to make really good profits on this stock. So APL Apollo does look quite attractive. Let's move on to the next stock. Coal India entry price. Not a good idea to enter Coal India because again, mean reversion, right? It's just so far away from everything. You want to wait to see Coal India come and retest around 5-6% lower at least before you make a fresh entry. So wait for the level of 360, 362 before you can consider it. Hello, Neeraj Khan. Let's take a look at Supriya. Okay, interesting. Let me mark this, okay? This is very good. So this point, right, you see positive divergence on 75-minute time frame, positive divergence on the 15-minute time frame, and positive divergence on the daily time frame. This is eclipsing. I talked extensively about eclipsing in the previous 2 videos. So eclipsing is, you know, wave within a wave within a wave, right? So when multiple waves of different wavelengths align to give you the same signal, that is a very strong entry. And when you say that you have to be patient in the market, basically you are waiting for that phenomena of eclipsing to happen before you make your positions. And when you use the form, the eclipsing, basically where you see multiple time frames giving you the same signal, whenever you execute your trades there, right, your success rate increases a lot. Here, what I can see for Supriya is that the underlying trend is very bullish and it is also taking a little bit of correction here. What I think is that you can start purchasing Supriya, but use the next 4-5% to make your accumulation. So set your GTT orders, like for example, you can buy a trans here at 311. Next one, you set a GTT order at 305. Next, you set one at 297, right? So the stock can come down to retest the 200 EMA of the 75-minute time frame. Even though it has done it again, it might do it again, right? So hold your position, like build your position, and then set your stop loss. You need to set your stop loss here. Unfortunately, it's a little big, I know, 268, but there's no workaround for that because the stock is still coming out of a major correction and yet to unfold into a very strong rally. But when the stock does begin rallying, I think it can go at least for the level of 404, 437 and 510. Good stock. So with that, we've come to the end of our session. I have a hard stop because I have to jump on to the next meeting, but I will see you again on Monday. And if today I have not been able to answer your queries, please make sure that you attend the session on Monday at 5 p.m. and mention your queries there. I will prioritize your questions. Just do this on Monday when you join the session. As soon as you join, leave the comment and write Friday dash name of the stock dash your cost price, and I will prioritize the analysis of your comment. So thank you so much for joining me today. I will see you on Monday. Namaste.